Hey there everyone, and welcome back to another video where we cover one of your favorite topics apparently, ETFs or exchange traded funds. Now what's so great about ETFs is they're just like regular stock funds, but they're traded like regular stocks. And they can give you great diversification while you can focus in on one area of the economy. So you can go for general ETFs or some industry specific ones maybe. And they offer lower expenses than traditional funds, and they usually also offer a little bit of a dividend on top as icing on the cake. Now, you all know about the S&P 500 ETF or the Vanguard ones, but let's look at some more exciting ones, shall we? Now, the ETFs I'm going to go over in this video covers some emerging and exciting markets where there's a lot of things happening in terms of innovation and industry growth. And the chance of the next Apples and Amazons of tomorrow being in one of these ETFs is very strong. So see if you can spot them. And these ETFs will cover very exciting industries such as automation and robotics, financial technology. There's going to be some software as a service, cloud computing, all sorts of good stuff. So I'm going to start off with ARK Invest's main ETF. This is a company I've done extensive coverage on. You can go back and watch my video on ARK Invest. This is their flagship ETF. It has 2 billion assets under management, 0.75 expense ratio, no dividends. It came around in 2014. It usually holds between 35 and 55 stocks. And it has outperformed the S&P 500 by 91% over the last 4 or 5 years or so. And I think this is a no-brainer when it comes to exciting ETFs. It covers automation, robotics, electrification. It covers software as a service, genomics, financial tech, 3D printing. This is a great ETF. It's been outperforming so far. It has a great risk-reward profile. So this is pretty much your go-to disruptive technology ETF. Now, ARK Invest ETF holds companies like Tesla, Square, Invita, Lumina, Stratasys, Roku, etc. So you get small companies with big growth potential, but they're not, they have proven themselves with some great performance already. So these companies are not like no names, they're pretty well known within their industries. Next up is going to be Global X's Robotics and AI ETF, tick symbol BOTZ or BOTZ. It has 1 billion under management, 0.68% expense ratio, 0.99% dividend. It came around 4 years ago. It usually holds around 40 stocks, but it has underperformed the S&P 500 by 5%. So this one is banking on the continued adoption and development of robotics and automation, especially within manufacturing. And it holds companies offering semiconductors and chips, robots themselves, and some software. But it's mostly actual robotics company making the robotics arms, making the cars and stuff. And it is quite overweight Japanese robotics companies. So it holds Nvidia, Keyence, Mitsubishi, ABB, Intuitive Surgical, Fanuc, Daifuku, and Dynatrace, etc. So quite heavily in Japanese robotics stocks, but they are some of the greatest, right? And most of us can't even invest in Japanese companies, so this is a great workaround for that. I'm going to interrupt this video and go for a question of the day. So whenever I get a comment, I'm going to pick out one that I'm going to answer in the next video. So this one I received on my biggest mistakes I've ever made video. It's from Basada Hannah 4, and the question goes, love your channel, keep up the great videos. May I ask you, what broker do you use? I mentioned it in this video. So I use a broker for the Nordic region called Nordnet. Next ETF on the list is going to be iShares Expanded Software ETF. So IGV, 3.5 billion under management, 0.68 expense ratio, 0.58 dividend. Came around 4 years ago. holds about 40 stocks. It has outperformed the S&P 500 by 134%. So software companies, and especially software as a service, and Web 2.0 and cloud computing is, I think, the best industry to invest in. And this company has picked out the very best. So if there's one field within technology I would invest in, it would be software. So I like to take a tech ETF and throw out all the hardware and be left with software only. And this one holds companies like Microsoft, Salesforce, Adobe, Oracle, Activision Blizzard, WorkNow. It is an Autodesk, just a brilliant ETF. Definitely one for me. I don't hold it personally, but if I had to invest in one ETF, I actually might go with this one. These companies have great margins. They have acquisitions are being made, and more of the developed world is transitioning online and digitalizing everything, and these companies are going to help the world do so. So the great tailwind for these companies, and overall great balance sheets as well, and historically great stock performance. Next up is going to be KraneShares CSI China ETF, aka KWEB. $2.3 billion under management, 0.76 expense ratio, 0.09 dividend, came around in 2013. It has about 46 stocks. It has underperformed the S&P 500 by 20% over the last 5 years. And I think China is pretty much the most exciting place to invest outside of the US. So if you're like me, you're long US stocks only, China is a place to look. I'm invested in Alibaba, but there are some other great big tech companies from China. Because of the Chinese stocks, the big tech giants are the most popular, and I think the companies set up for global expansion, much more so than more traditional companies. So just like you have the FANG stocks in the US, you have Alibaba, Tencent, and NetEase for China. And companies like Alibaba and Huawei and Tencent has expanded globally very much so in the latest years, even which has gone almost unnoticed by some people. They do a lot of acquisitions, so they buy up Western companies without anyone knowing. So a lot of cash flow is actually going to these Chinese tech companies. So it's going to hold Tencent, Alibaba, Meituan, JD, Baidu, NetEase, Vipship, Tal, Bilibili, and so on. So mostly internet, streaming, cloud, software, e-commerce, apps, some gaming in there. That's what these companies usually do. Next up is going to be ARK Invest Financial Tech. Again, ARK Invest, a great company. They do extensive research, so head over to their website if you want to learn more about these companies. Only $88 million under management, 0.75 expense ratio, came around last year actually. 35 to 55 stocks. It is outperformed by 12.5%. And I could just keep going on with more tech stocks endlessly. But I think if I had to pick one other area of innovation, it would be financial technology. Because I think the way we pay for stuff and transact currency with each other is ripe for disruption. And I think the world will move to a more decentralized, peer-to-peer, digitalized system. And these companies are at the forefront of that movement. So you're going to have companies like Square, Tencent, Apple, Zillow, LendingTree, PayPal, Pinterest, Alibaba, and Amazon. So these companies are all trying to figure out how the future of commerce and transaction is going to look like. Will it be credit cards? Will it be Bitcoin? Will it be other decentralized networks? We'll see. But these companies are trying to figure that out. So these are ETFs I suggest you buy if you want more exposure to small companies that can become big, or in some cases, well-established companies that are still growing at a respectable pace. If you go with more traditional stocks, be it energy or financials or utilities, you're going to get more value companies paying high dividend. These ETFs, they're not for dividend, they're not for value, they're not for PE ratios. This is for growth, revenue growth, expansion, acquisitions, research and development. That's what's going on in these ETFs. So if you're looking for some funds to buy and hold for the next couple of decades, these are the ones. I do really think so. And I might just do a checkup video in 2030 or 40 and see how it all went down. So, I think you will be surprised at how much these companies can change the world, and of course also your portfolio for the better. So thanks for watching. Let me know if you're invested in any of these ETFs, or if there's some competitors out there that should have been on this list instead. And as always, I'll see you guys in my next video.